how do property taxes affect property owners' mortgage? If they've got a homestead and they're paying their mortgage every month, how does those property taxes get incorporated into that? And then how can we help?
By default, your property taxes are going to fall into your escrow, which is usually going to be your property tax and your home insurance. So that's going to get you're going to get a monthly. You're going to be paying that monthly, basically. Your escrow company is going to do an assessment on what they think that your tax bill is going to be at the end of the year, and they're going to spread that out over 12 months and bill you for it. Then at the end of the year, once the bill becomes due, they'll pay it out to the relevant places. It can be a lot. It can be a large percentage of your mortgage, especially since property taxes are high in Texas, higher than most places. So I mean, the main thing you can do about that is file a protest with somebody that knows how to help. And if we get that reduced, you can call your escrow company and get them to recalculate your monthly payment based on the new estimated amount. So it can save you some money along the way. Sometimes they'll do a recalculation mid-year like that. Sometimes they'll just wait until the end of the year and pay you back the overage.
Yeah, one of the common things that we see with specifically with new property owners, new homeowners that they're not aware of is how much is going to be escrowed within their monthly payment. So, between 40 and I think it's 40 and 55% of a monthly escrow is going towards taxes. The rest of it is for your mortgage itself. And when a new homeowner, after their first year, receives their mortgage update, they're shocked with how much higher their monthly payment is than what they were told either by the realtor or by the title company. And that's because the taxes were based on the previous year and the previous owner. That previous owner may have had all kinds of exemptions. Previous owner probably had a much lower value because essentially you are creating a new value for that property by buying it. And so they're just so caught off guard. They don't know where to turn. We have to explain to them, A, what happened, and B, that we're going to try and help them out as much as we can. But yeah, it's one of those things that it's like sticker shock for a brand new property owner.
For sure. Yeah, I mean, case in point, that happened to me, right? I do this, and so I knew to expect it. But I bought my home from the original owner from 70 years ago, and she had all the exemptions, and her value was very deflated, and her taxable value was even more deflated. And so after, I bought it mid-year, and then when my tax bill came out for the following year, it was 4 times what my tax bill was, based on her exemptions. And a lot of people don't know to expect that. A lot of realtors don't know to tell their clients about that. So it's an important thing to be aware of as you're buying a house.
I don't know if realtors don't know that or if they choose not to say that.
That's a good question. I don't know. I don't know that we can broadly attribute that.
But education, is super important when it comes to realtors and title companies, letting the owner know that, hey, this is going to happen.
That's right.
And we try and do that as much as we can. But.
Because in most cases, if you buy a property partway through the year, for the following year, your appraisal is going to be based on pretty much what you paid for it. And so if you paid significantly more, if the house was taxed the prior year at $175 and you paid $250 for it, well, your next tax bill is going to be an unexempted full $250,000, based tax bill.
You may get lucky and get below that, but still, it's going to be pretty close to it.
It'll usually be
like
pretty
99%
close.
of the time.
Yep.